Mortgage rates had a big drop last week, finally. This was a direct result of Friday's jobs reports numbers, which we will cover in detail today. Housing inventory growth has actually been slowing down. The expectation is that high mortgage rates will curb demand by making less people buy houses, and as a result, days on market will get higher and inventory will start to stack up. But that's not quite what's happening. We're going to cover all this and much more in today's weekly update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties, as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, I do a top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin County. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is May 6th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here. It'll take you to the latest weekly market update. First up is market news. Last Wednesday, the Fed announced that they're going to be holding rates steady, so no rate cuts yet. This was a surprise to absolutely nobody. And mortgage rates didn't move at all as a result of this announcement, because that's the reason that mortgage rates have been climbing. So the bond market had already priced in this decision weeks ahead of time. So when they announced, there was no real change. But then we got the jobs report on Friday. So let's discuss why that finally sent mortgage rates back down. Remember, as we talk about every week, the Fed cares less about the current inflation numbers and more about the labor market, even though what they talk about is inflation. Because they believe there are still too many people employed making too much money from too much wage growth. Therefore, they're going to spend too much money and cause more future inflation. So they want to see less people making money from unemployment numbers going up, from wage growth slowing down, because they believe that will prevent future inflation. So in last week's jobs report, we saw that unemployment ticked up ever so slightly in April, breaking a string of strong jobs reports. The national unemployment rate rose to 3.9%, up from 3.8%, which doesn't mean much, and we've been stuck between 3.7 to 3.9% since last August. But at least we're back at the top of the range instead of the bottom. If you want lower mortgage rates, what you're also hoping for is higher unemployment numbers. So we're heading in the right direction very slowly. Then what we saw is the U.S. economy added 175,000 jobs. That's less than we had in March and lower than what the economists were expecting. It's also well below the average monthly gain over the last 12 months of an average of 242,000. So again, we have a small rise in unemployment and a decent drop in the number of jobs added. Then remember, a few weeks ago we saw that the number of job openings across the country fell to a 3-year low back in March, and that the number of people quitting their jobs to take higher paying jobs has been declining as well. Then lastly, we saw wage growth coming in lower than expected. And if you look here at the average hourly earnings year over year, you'll see wage growth was way up here. It's been trending down overall, but this last month we saw a big drop. We're finally into the 3s. So you can see how long we've been in the 4s. We finally dropped under 4. And what the Fed is targeting is more like a 3% wage growth. So you can see there is a ton of evidence that the labor market is cooling off, wage growth is cooling off. The next big evidence we're going to need to see is unemployment rising above that 3.9% number. That would make for a very strong case for rate cuts later this year. So we're definitely heading in the right direction for lower rates by the end of the year. The last component is that unemployment number. Okay, moving on, starting with national housing inventory. This week we had a very small increase of just 3,452 homes for sale in the U.S., which gets us up to 559,744 homes for sale in the country. For reference, the all-time inventory bottom in 2022 was just 240,000 homes for sale. The peak of last year, we had 570,000 homes for sale. And this same week in 2015, we had 1,060,000 homes for sale. So we're up double from the 2022 bottom, but we still almost need to double to get back to a normal market. And this is not the growth we were expecting, especially with mortgage rates way up at 7.5%. That was supposed to curb the demand, giving inventory space to grow, and it's just not happening. And also, this is just 1 or 2 weeks. We have to see if this trend continues of the slowing inventory growth, but it's not what we wanted to see. What it looks like instead is people are simply just willing to buy at higher rates still, and I can tell you in my personal experience, Every single home I offer on that is a move-in ready home that is priced normally is getting multiple offers every single time. Now we're looking at the new listings data, and basically all year we've just been tracking very close to 2022's number. We are having quite a bit more listings every week than we did last year, but last year was just a horrible year for inventory. So we're tracking pretty close to 2022, but in reality, we need to be quite a bit above 2022's numbers to get to a normal market. And specifically this week, we're actually 5,141 homes less than in 2022. So even though we've been tracking with 2022, we had significantly less new listings this week than the corresponding week of 22. So far this year, inventory has been looking good, meaning we've at least been tracking with 22's numbers, but at least the last couple of weeks, with rates as high as they are, which is significantly higher than where they were in 2022, inventory definitely looks to be slowing its growth, which is not good, because the second rates drop, inventory is going to start declining. So the hope is that high rates would have given us a big stack of inventory so that when rates drop, there's a nice cushion. It doesn't go back to 200-something thousand homes for sale in the entire country. So everyone be hoping the inventory will start to grow again faster in the coming weeks. Okay, moving on to mortgage rates. We started the week off at a 7.43. We got up to 7.51, and then progressively over to Friday all the way down to 7.28 as we got that labor report. And you can see on this chart what a big drop off that was. So that is great and very welcome news for home buyers. And then regarding mortgage purchase applications, even with rates up as high as 7.5%, we saw just a 2% decrease in the number of people applying for mortgages. And we're down just 14% year over year. So far this year, we've had 5 positive, 9 negative, and 2 completely neutral prints. So to have that many more negative than positive prints and still only be down 14% year over year, that negative can change to a positive very quickly if rates drop. Which again just tells us people are getting used to higher rates, so they're still applying for mortgages. And once rates drop, I think we're going to see a lot more demand than we did last year. Okay, before we move on to the local market data, if you're considering buying a home anywhere in Texas in 2024, 2 things. If you want to become a master of home buying and know everything there is to know about the process, I've released 2 courses. One is for new construction and one is for pre-owned homes, as they're entirely different processes. And these courses cover literally everything you'll need to know. So if you're interested in either of those, you can find the link in the description. Number 2, I've developed a max affordability calculator. This will very quickly and easily get you into the ballpark of how much home should you actually be looking for based on your personal financial situation. It will give you several different options to choose from, and it takes into account everything all the way down to your tax bracket. Getting pre-approved is a big hassle, especially if you're not even sure that you want to buy a home. So this calculator is your shortcut to seeing not only what a lender would approve you for, but helping you understand how much you should be paying for a mortgage based on your finances. There is a link to that as low as well, and you'll see a walkthrough video there as well. Now let's move on to the local markets, starting with the MLS data in Dallas County. Last week there were 614 homes listed. That's 21 more than the previous week. 459 closings. That's 111 more than last week. Of the homes that closed, 134 were immediate sales, meaning they contracted within the first week. That's 29 more than last week. 362 went under contract. That's 5 less than last week. And in total, there are 2,532 homes either under contract or in pending status. That's 121 less than last week. Now moving on to Collin County, we had 463 new listings. That's the exact same as last week. 367 closings. That's 87 more than last week. Of the homes closed, 118 were immediate sales. That's 25 more than last week. 274 went under contract. That's 38 more than last week. In total, there are 2,042 homes either under contract or in pending status. That's 34 more than last week. Okay, now let's take a look at the Market Action Index. All this is this one easy to read graphic with a number that very quickly gives you an overview of all of this data. As of this week, Dallas is still a 46. Dallas had a small tick up from the last few weeks. We are still in a strong seller's market, but all we're looking at here is just a quick overview of the reality of the market. And what it looks like is Dallas County, you can see the median list price is continuing to climb. Median days on market is remaining low at 35. The number of homes having a price decrease is climbing as is expected this year, and it should be climbing all the way through probably November. So don't be surprised if this number continues up. Inventory, though, looks to be declining. At the very least, it has flattened out, but it looks to be declining slightly. Again, that's the number we want to see go up when rates are high. Because if rates drop, this number is going to come straight down because there's going to be so many more buyers coming into the market. So all we're seeing here, this looks totally normal. Things are going up, things are heating up. That's the way to see it. We are entering the spring market. things are going to be heating up all the way through probably August, which means every week that you wait to buy a house, it's going to be more expensive. That's just the reality. It happens every single year. It's not specific to this year. What we're seeing is totally normal. Every week it's going to get more expensive. Now let's move on to Collin County. Collin County is showing a slightly different picture. It looks like the market action index has been cooling off here. This, I would say, is a little less reliable in Collin County because it's two markets basically. You have the new construction market, and it's a very big market. And you have the resale market, and they're entirely different, specifically because a lot of the resale homes are competing with the new construction homes. But I will say, I see the market action index cooling off, and I will tell you personally, I'm actually having less calls for people looking in Collin County. Now that may mean absolutely nothing. I'm a very small sample size of, the total market. But for a while I was getting calls tons about Collin County, and now I'm getting much less. So could be nothing, but that's just been my experience. But median list price, small tick down, but still climbing. So what we look at is not what happened this week. If you look at the median list price over the 90-day average, what is this line doing? It's headed straight up. So even though this looks to be flattening out on the weekly, what we're looking for is trends. When we look at the 90-day, it's obviously the number is still going up. As well as their median days on market is much lower than Dallas. They're all the way down to 28. The number of homes having price increases, which I've been talking about, this is still very high, but at one point, 10% of homes were having a price increase every week. So it's good news that that's dropping, but it's still crazy high. 7% of homes having price increases, that's like a third of new construction homes every week having a price increase. And then their inventory as well, it's climbing, but again, it's super slow. It's not what we need at all. We need inventory growing faster than that, but they are officially at a slight seller's advantage. But again, if you look at the trend, it's showing exactly what should be happening this time of year. Things are trending upwards. The market is getting hotter. Okay, now we're moving on to the top 10 ranked charts, both hottest and coolest cities and zip codes in Dallas and Collin County. And this is using that same market action index number. Anything a 30 or below is a buyer's market, anything above a 30, and we're just asking how much of a seller's market are we in. So starting with the hottest cities, number 1 is Louisville. Carrollton heats up 2 spots this week. Coppell remains at number 3, followed by Grapevine, which cools off 2. Ferris heats up 1. Plano cools off 1. Lancaster remains. Richardson heats up 1. Garland heats up 1. And Grand Prairie jumps on at number 10, knocking Sachse off the list. Then we like to zoom into specific zip codes. The absolute hottest this week is Garland, 75042, followed by Carrollton, 75007. Louisville 75077, Carrollton 75010, Louisville 75067, Irving 75063, Plano 75075, Coppell 75019, Plano 75023, and Richardson 75080. Now we're doing the same thing but looking at the coolest cities. Van Alstyne, of course, remains at the absolute coolest spot. It is the only buyer's market in all of Dallas and Collin County. It's below a 30. It's at a 29.3, and it has been hanging down there pretty much forever. Followed by Nevada and Lavon hold spots number 2 and 3. Leonard cools off 2, followed by Prosper, which remains, and then Salina cools off 3. So seeing these 2 on the coolest cities list, that is a big bulk of Collin County sales. So it does look like things are cooling off some in Collin County. Then Blue Ridge heats up 3 spots, Rockwall heats up 1 spot, Farmersville heats up 1, and Roy City jumps on as the hottest city on the coolest cities list, and it knocks Red Oak off the list. So Red Oak heated up off this list. Then zooming into the specific zip codes, the absolute coolest is Dallas 75204 at just a 28.88, followed by Van Alstyne 75495, Nevada 75173, Lavon 75166, Dallas 75203, Irving 75038, Dallas 75205, Leonard 75452, Prosper 75078, and Rockwall 75032. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. Thank you for watching. I'll see you in the next video.